If you're self-employed in America, you already know one uncomfortable truth. You can work 60 hours a week, chase clients, send invoices, pay taxes, still feel like you're one medical bill away from financial disaster. No employer, no HR department, no subsidized benefits. Just you, trying to navigate the most complicated health insurance system on earth. Let's be honest. Most self-employed Americans, freelancers, gig workers, contractors, small business owners aren't skipping health insurance because they want to. They're skipping it because the entire system feels rigged against them. Premiums that cost more than a car payment. Deductibles that feel higher than your rent. Plans that look cheap until you read the fine print, and suddenly realize the fine print is where the real cost lives. But here's the shocking part. There is a way to get affordable coverage. There are laws and subsidies designed specifically to help self-employed people. And there is a step-by-step method to understanding exactly what plan protects you and what plan drains your bank account. Today, you're going to see it all. Whether you're a small business owner trying to cover your family, a freelancer trying to lower premiums, or a gig worker who has never had coverage before, this video breaks down the real rules behind the U.S. health insurance system. Grab a notebook, because what you learn in the next few minutes can literally save you thousands of dollars and protect you from the kind of financial ruin that hits when life throws an unexpected emergency your way. Picture this: you're self-employed. You finally get your big client payment. You feel good, confident, like things are finally moving in the right direction. Then, out of nowhere, you get sick. Or your kid breaks an arm. Or you need a prescription that costs more than your groceries. That's the moment every self-employed person realizes something painful. Health insurance isn't optional. It's protection. But here's the real problem. No one teaches Americans how the health insurance marketplace actually works. Not in school. Not when you start your business. Not even when you try to sign up. You're thrown into a maze of deductible charts, network types, premium calculations, tax credits, income limits, and confusing terms. And let's face it, most people give up and pick whatever looks cheapest, not realizing that the cheapest premium often leads to the most expensive medical bills. Being self-employed means you don't get the safety net that traditional employees take for granted. No employer paying half your premium. No HR person to explain benefits. No group plan to fall back on. Everything is on you. And that makes health insurance feel more like a gamble than a guarantee. But that's exactly why this video exists. Because there is a formula. There is a strategy. And there is a way for self-employed Americans to choose the right plan, maximize tax credits, lower monthly costs, and avoid risky alternatives that leave you uncovered when you need help the most. In this video, you'll discover why self-employed people pay more and how to pay less, the truth behind bronze, silver, gold, and platinum plans, how to legally lower your premiums with tax credits, what health insurance companies don't tell you about deductibles, the massive difference between PPO, HMO, and EPO networks, why some cheap plans can ruin you financially, complete checklist to choosing the perfect plan for 2025 by the time you finish watching. You'll be able to look at any health insurance plan and immediately understand whether it's a smart choice or a trap. So if you've ever felt frustrated, overwhelmed, or confused by health insurance, stay with me. This is the guide every self-employed American wishes they had on day one. When you're self-employed, everything from your income to your schedule to your health insurance is something you have to build, manage, and protect on your own. There's no HR department, no employer subsidy, and no team of benefits specialists sitting in a conference room figuring this stuff out for you. Instead, you wake up every morning running a business and managing your own financial risk at the exact same time. And nowhere is that risk more obvious than with health insurance. The first thing most self-employed Americans notice is simple. The premiums feel insanely high. While a traditional employee might pay a fraction of the cost because their employer covers 50 to 80% of the monthly premium, A self-employed worker pays 100% of everything. If you see a plan for $700 a month, guess what? There's nobody behind the scenes splitting that bill with you. It's all coming out of your pocket. But it goes deeper than that. Insurance companies classify individuals and small groups as high-risk categories. When a company with 200 employees buys insurance, the risk is spread across 200 people. If one person gets sick, the cost is absorbed across the whole group. But when you're buying a plan as a single self-employed person, you are the risk pool. If something happens to you, it's your plan and your plan alone that has to absorb the cost. That's one of the biggest reasons premiums are higher. Then there's the unpredictable income problem. Since most self-employed earnings fluctuate month to month or season to season, calculating your expected income properly becomes a challenge. And because tax credits for Affordable Care Act ACA plans are based on your annual estimated income, this fluctuation directly affects your premiums. Estimate too high, you lose credits and pay more every month. Estimate too low, you might owe money back at tax time. And here's the part that frustrates most people. Many self-employed Americans don't even know they qualify for financial help. Over 70% qualify for tax credits, but never apply because the system is confusing and nobody explains it in human language. Add in complex deductible structures, confusing plan names, and networks that sound like alphabet soup, and the entire system becomes overwhelming. Understanding these challenges isn't just useful, it's essential. Because if you can understand why the system is built this way, you can start learning how to work with the system instead of being crushed by it. The Affordable Care Act Marketplace, also known as healthcare.gov, is designed specifically to give individuals and self-employed Americans a place to get comprehensive medical coverage. But most people only see one thing when they visit the site: a long list of confusing plans. Here's where things get interesting. The Marketplace isn't just a place to buy insurance. Where the government helps reduce your costs through two powerful tools. 1. Premium tax credits. These are monthly discounts applied directly to your insurance bill. They're based on your estimated yearly income. If you make between 100% and 400% of the federal poverty level, you're likely eligible for significant premium help. Even people earning $40,000 to $80,000 or more, depending on family size, qualify. If you're self-employed and not taking advantage of these credits, you're paying way more than you should. 2. Cost-sharing reductions. These reduce your deductibles, copays, and out-of-pocket max, but they only apply to silver plans. Most people skip silver because bronze looks cheaper, not realizing bronze often leads to massive out-of-pocket expenses later. For self-employed Americans, these benefits change everything. Suddenly, a $700 plan becomes $220. 500 Australian dollars deductible becomes a $50 deductible. 10 out-of-pocket. Max becomes $1,500. Most people only learn about these benefits after paying too much for years, simply because the information isn't clearly explained. Another critical part of the marketplace is open enrollment. You can only sign up during specific times, usually November through January, lest you qualify for a special enrollment period, such as losing previous coverage, moving states, getting married, having a baby, significant income change. Self-employed workers, because their income fluctuates, often qualify for these special periods without even knowing it. Understanding the marketplace is like unlocking the cheat code for lowering health insurance costs. But choosing the right plan inside the marketplace is a separate challenge, and that's where the next part begins. Health insurance networks are one of the biggest sources of confusion for self-employed people. The letters look random: PPO, HMO, EPO, HDH, P, but the difference between them can literally save or cost you thousands. PPO, Preferred Provider Organization. This is the most flexible plan type. You can see specialists without referrals. you can see out-of-network doctors often partially covered. If you travel or move around a lot, PPOs give you freedom. But here's the catch. PPOs are usually the most expensive. For a self-employed person traveling for gigs, attending conferences, or working in multiple states, PPO can be a lifesaver. But if you're budget conscious, this might not be the right fit. HMO Health Maintenance Organization HMOs require you to stay in network and get referrals to see specialists. But they're much cheaper. If you live in a stable area and don't need specialist care often, HMOs can be the most cost-effective choice. This is where many self-employed people save the most money by choosing an HMO and sticking with in-network providers. EPO Exclusive Provider Organization. Think of EPOs as a hybrid. No referrals needed, but no out-of-network coverage at all. This means if you accidentally see an out-of-network doctor, you might pay the entire bill. HDHP High Deductible Health Plan. These plans work with health savings accounts, HSAs. They have low premiums and high deductibles, perfect for young, healthy, self-employed individuals. People wanting to save tax-free money. Individuals who use insurance mainly for catastrophic protection. HSAs let you save money tax-free to use for medical costs, which is one of the smartest long-term strategies for entrepreneurs. Understanding these plan types isn't just helpful, it's mandatory. Choose the wrong one, and you could end up with a plan that looks cheap but leaves you totally exposed when something happens. This is where most self-employed Americans lose money, not because they bought the wrong plan, but because they didn't understand how the expenses work. Deductible. This is the amount you must pay before your insurance starts covering major services. If your deductible is $6,500, you pay that amount first unless certain services are exempt, like preventive care. Copay. A fixed amount you pay for specific services. Example, $40 per doctor visit, $20 for generic prescriptions. Plans with higher premiums often have lower copays. Bronze plans often have nitrogen monoxide copays until the deductible is met. Co-insurance. After you meet the deductible, you share the cost with your insurance company. If your co-insurance is 20%, you pay 20% and insurance pays 80%. Out-of-pocket maximum UPME. Max. This is the most you can pay in a year. This includes deductible plus copays plus co-insurance. Self-employed individuals must pay attention to this number. It determines your worst-case financial scenario. For example, if your UPMAX is $2,500 and you break your leg, need surgery, and require therapy, the most you'll ever pay that year is $2,500. After that, insurance covers 100%. This is why cheap bronze plans often fail self-employed Americans. They look affordable, but the OOP max might be $9,000, $10,000 per year. Understanding these four components helps you see the true cost of a plan, not just the premium. When self-employed Americans shop for health insurance, one of the most overlooked factors is network type. Networks determine where you can receive care, which providers are covered, and how much you will ultimately pay. Choosing the wrong network can drastically affect both access to healthcare and out-of-pocket costs. HMO Health Maintenance Organization plans are the most restrictive, but generally the most affordable. With an HMO, you must choose a primary care physician, PCP, and all specialist visits require a referral from your PCP. While this structure keeps costs lower, it can create delays in treatment if your PCP is unavailable or if you require a specialist quickly. HMOs also cover in-network care only, so traveling outside your network can result in full out-of-pocket costs. PPO Preferred Provider Organization plans offer significantly more flexibility. They allow you to visit specialists without referrals and often cover out-of-network care, though at a higher cost. PPOs are ideal for those with ongoing medical needs, chronic conditions, or families who want the freedom to choose doctors and hospitals without jumping through hoops. The trade-off is a higher monthly premium compared to HMOs. EPO Exclusive Provider Organization plans are a hybrid of HMO and PPO, Like an HMO, EPOs require you to stay in network. But like a PPO, you don't need referrals to see specialists. EPOs are a great middle ground, offering convenience without the extra cost of PPO premiums, but they are still risky if your preferred doctors aren't in network. Why does network choice matter so much for self-employed individuals? Unlike employees with employer-provided plans, self-employed Americans have no safety net if they choose the wrong plan. A single emergency visit outside the network can wipe out months of income. Network restrictions also affect specialty care, lab testing, and mental health services. When evaluating plans, create a personal network map. List your preferred primary doctors, specialists, hospitals, and clinics. Check if each provider is covered under the plan you're considering. Factor in travel time, availability, and wait times, which can affect your business productivity if appointments take you away from work for extended periods. Finally, consider future changes. If you plan to expand your family, move to a different state, or need maternity care, ensure your network accommodates these possibilities. Remember, the cheapest plan isn't always the smartest choice. It may cost more in emergency medical bills and stress. Understanding your network fully ensures you get affordable, accessible, and high-quality care, which is critical for maintaining health and business productivity as a self-employed American. For self-employed Americans, health insurance isn't just about emergency coverage. It's about proactive management of health and finances. Preventive care, telemedicine, and supplemental options can significantly reduce costs while improving outcomes. Preventive care includes annual physicals, vaccinations, screenings, and wellness visits. Most ACA-compliant plans cover preventive services at no additional cost, meaning you don't pay deductibles or copays for these essential services. Utilizing preventive care can catch health issues early, reducing long-term medical expenses. For self-employed individuals, this is a strategic advantage. Fewer sick days, less income disruption, and avoidance of costly chronic disease management. Telemedicine has grown exponentially in the last decade and is a perfect solution for self-employed professionals with limited time. Virtual visits allow you to consult doctors remotely for minor illnesses, follow-ups, or mental health services. Many plans provide telehealth at no extra cost, saving travel time and sometimes preventing unnecessary emergency room visits. During flu season, or if contagious, telemedicine prevents spreading illness in your home or workspace. Supplemental insurance, including dental, vision, critical illness, accident, ATs, and long-term care insurance fills gaps in primary coverage. For example, dental and vision are rarely included in standard ACA plans, but their cost for a separate plan is relatively low compared to potential out-of-pocket expenses. Critical illness insurance can provide lump sum payments for conditions like cancer, stroke, or heart attack, covering lost income or specialized treatment. Accident insurance protects against unexpected injuries, which is essential for those who work physically or travel frequently. For families, supplemental insurance can be a lifesaver. Children's dental and vision care are often expensive if not covered. And accidents happen especially for kids or those running physically active businesses. For solo entrepreneurs, having supplemental coverage ensures that unexpected medical costs don't derail your personal or business finances. The key is strategic integration. Combine preventive care, telemedicine, and supplemental options with your primary health insurance to reduce risk, maximize value, and create a safety net. Consider your budget, family needs, and potential healthcare utilization when selecting supplemental policies. Ultimately, these tools transform health insurance from a mandatory expense into a comprehensive financial and health management system, allowing self-employed Americans to focus on growing their businesses while safeguarding their well-being. Health insurance is not a set-it-and-forget-it lastly for self-employed Americans whose income, family situation, and health needs are constantly evolving. Strategic planning and annual review are essential to avoid overpaying or being underinsured. Start by assessing your income trends. Self-employed income can fluctuate month to month. A plan that worked last year may be unaffordable or insufficient now. Adjust your coverage and subsidy applications accordingly to ensure maximum benefit from government tax credits and cost-sharing reductions. Next, review your deductibles, copays, and out-of-pocket maximums. These numbers directly impact how much you could spend in a medical emergency. If your deductible is too high relative to your savings buffer, consider switching tiers or increasing your premium to reduce risk. Check your network and provider access annually. Doctors retire, relocate, or leave networks, which could disrupt your continuity of care. Verify that your preferred providers remain in network and that hospitals and urgent care facilities are accessible. Evaluate your telemedicine, preventive care, and supplemental policies. For instance, if a telehealth option wasn't available last year, incorporating it now could reduce costs and improve convenience. Insure dental, vision, and supplemental critical illness coverage still match your current health risks and family needs. Consider the impact of life changes. Marriage, children, new business ventures, or relocation can all affect plan suitability. Update your Marketplace application, employer-sponsored benefits, or private policy to reflect these changes. Finally, consult a licensed insurance advisor specializing in self-employed coverage. Their guidance can uncover subsidies, network options, or policy designs you may not find independently. Advisors can run simulations, recommend adjustments, and help you avoid costly mistakes. The key takeaway: staying proactive turns insurance from a reactive safety net into a strategic financial tool. Annual reviews, careful planning, and informed decision-making protect both your health and your business's financial stability. Using this checklist gives you the confidence to choose a plan without fear or confusion. Being self-employed means you're responsible for everything: your income, your schedule, your clients, and yes, even your health. But now, you're no longer walking into the insurance world blind. You understand the hidden rules, the traps to avoid, and the strategies that can save you thousands. If this video helped you feel more confident, more prepared, or more empowered when it comes to choosing your health insurance, then do me a huge favor. Hit the subscribe button so you don't miss more life-changing financial and insurance insights. Like this video if it opened your eyes. Drop a comment below with any question you have. Respond to every single one. Your health, your money, and your business matter. And I've got your back every step of the way.